Welcome back. Today we're looking at an investment analysis titled Don't Sell ABTC, Why This 38% Drop is a Gift for Investors.
Right, and it argues that the big price crash in American Bitcoin Corp is a huge buying opportunity.
Exactly. So our focus is going to be on maximizing the persuasive impact of what is, a pretty high conviction piece of analysis.
And the underlying research is solid. I mean, the due diligence on the Q3 2025 numbers is great. The case for ABTC is strong.
It is. The question is all about the packaging.
It really is. I think the first place to start is, well, the report needs to temper its highly promotional and emotive language. It just needs to align with the seriousness you'd expect from a deep financial analysis.
So you're talking about that title, the emojis, that kind of thing?
Exactly that. I mean, the high conviction style, it's engaging, and we don't want to lose that energy. But the aggressive, almost meme stock terminology?
Like hodl, steal.
Right, bear trap. It risks alienating the exact audience that can actually move the needle on the stock price. It almost undermines the quality of the data that's been so meticulously collected.
But isn't there a risk of going the other way? Being too dry? That title, Gift for Investors, it definitely grabs your attention.
It does, but we have to think about who we're trying to convince. The tone has to reflect the depth of the analysis, not just the enthusiasm. I think the key is to maintain the conviction, keep the positive angle, but just elevate the professional feel throughout.
So you're saying save the really strong, punchy claims for the end?
For the final verdict section, yes. Let the data do the heavy lifting first. You start soberly, you build your case, and then you end with conviction, not the other way around.
I see. So the professional tone validates the findings? Okay, let's get concrete. How would you rephrase that title?
Well, instead of the emotive framing, you could go with something more objective. Something like ABTC, analyzing the investment opportunity following the sector downturn.
Okay, yeah. That immediately signals serious analysis, but still hints at the upside.
It grounds the whole report. And you can apply that same logic to the closing remarks. The report ends with the weak hands are folded.
Which is fun, but it's not institutional language.
Not at all. It just degrades the impression of the analysis. A simple switch to something more technical, like the recent deleveraging event has cleared short-term speculative positions, does the same job but sounds infinitely more credible.
And swapping hodl for what?
Something standard. Maintain overweight rating or long-term conviction buy. These small changes are signals. They tell the reader this report is worth their time.
That's a great point. You let the numbers like the $3.5 million in net income speak for themselves. The professional wrapping just validates them.
Exactly. Now, speaking of professionalism, that also means addressing the elephant in the room.
The risks.
Yes, which brings me to the second point. The risk assessment here is alarmingly brief. To justify calling this a rare discount, the report has to dedicate a real section to articulating and then mitigating the key risks.
It's just that one line, isn't it? Something like, volatility will remain wildly high.
That's it. And for a Bitcoin miner, it's not enough. It completely overlooks the huge structural threats. Regulatory changes, mining difficulty, energy prices, these are fundamental to valuing the business.
It feels like a significant weakness, yeah. It sort of sidesteps the biggest questions in the sector.
And if you're asking a sophisticated investor to look past a 38% drop, you have to show you've done that work.
I wonder, though, is there a risk that if you add a huge risk section, you dilute the main message? The whole point is that this is a simple mispricing, right?
But you have to earn that simplicity. So the suggestion isn't just to list risks. It's to integrate a dedicated risk mitigation section.
Ah, okay. Mitigation, that's different.
It's a huge difference. You proactively address the top 2 or 3 sector risks. And then, this is the key, you use ABTC's own Q3 fundamentals to show why this specific company is uniquely positioned to handle them.
So the risk section actually becomes another part of the bull case.
Precisely. It shifts from a defensive disclaimer to an offensive argument about resilience.
Okay, I love that. So let's walk through an example. Say, the risk of rising operational costs.
A constant threat for miners. So you'd address that risk head-on and then immediately point back to the 56% gross margin growth and the positive net income.
You use the data as proof that they already have superior cost control.
It can handle that specific external threat. Or another one, what about Bitcoin's price stagnating below, say, $100,000?
Well, the report does mention they're hoarding Bitcoin, not just selling it.
Right. They hoarded over 3,000 Bitcoin in Q3 alone. You have to leverage that. Show how that strategy provides balance sheet resilience. It's like a high beta insurance policy against short-term volatility.
It turns the hoard from just a number into a strategic hedge. The argument becomes so much more robust.
It does, and that's what a sophisticated reader is looking for. They want to see that you've thought through the bear case and have a real data-backed answer for it.
Okay, that makes perfect sense. So that leads nicely into the third point, which is really about the core thesis itself.
Yeah, the idea that the drop was an artificial discount.
Exactly. The report says ABTC just got caught in a wider crypto rout when Bitcoin's price fell. It's a great story. A quality company sold off for macro reasons.
But the claim that this crash created a unique opportunity requires tighter comparative evidence. You have to prove ABTC is structurally delinked from that panic.
What's the weakness right now?
Well, the report presents ABTC's great results, like revenue doubling, but it does so in isolation. It doesn't show that these numbers are uniquely better than other miners who also dropped 38%.
So without that context, it's just a report that says ABTC is a good company.
Instead of what it needs to be, which is an investment thesis that says ABTC is an outlier you should buy right now.
So the suggestion has to be about introducing some comparative metrics. You need to benchmark them against the rest of the sector.
A few brief, high-impact data points would do it, something to prove that its drop really was disproportionate to its strength.
So instead of just saying ABTC is profitable, unlike many miners?
Which is too vague. You need to provide a hard data point. Show the $3.5 million in net income or that 56% gross margin, and then contrast it directly with a peer average. Even a footnote saying well above the peer average of X% would instantly validate the claim.
And that one data point makes the discount look truly artificial. It's a quick fix with a huge impact.
A huge impact. And you can do the same thing with the anecdotal evidence, too. The report mentions Eric Trump holding his stake, calls it the Trump put.
Which is a strong signal of insider confidence for sure.
It is, but you can make it even stronger. To really sharpen that point, you could briefly note that while he's holding his 7.5%, maybe competitor insiders were selling, or were just silent.
Creating a direct contrast.
A meaningful contrast that shows smart money inside ABTC sees things differently than smart money elsewhere. You prove through data and anecdote that ABTC is separate from the panic, and suddenly the whole thesis becomes almost undeniable.
This is all really powerful feedback. So to summarize the actionable points for the listener, we've got 3 core opportunities here.
Right. First, it's about refining that tone for professional credibility. Move away from the emotive, stock culture language, and let the strong fundamentals speak for themselves.
Second, build out that proactive risk mitigation section. Don't just list risks. Use ABTC's specific financial strengths, like its gross margin and its Bitcoin hoard, to show exactly how it can neutralize those sector-wide threats.
And finally, you have to differentiate ABTC from the sector-wide panic. Use comparative data. Prove that its profitability is truly exceptional, not just good in a vacuum. That's what solidifies the whole artificial discount argument.